When you say best estimate, you said, I think once before, about China's numbers being a little bit murky. Also the prospect of banks inside China. You're head of the FSB, the Financial Stability Board. How much do you worry about how much bad stuff there is on the balance sheets of Chinese banks?
Well, I think that any time you've had a very sharp increase in credit growth, as you have in China, and more broadly in non-Japan Asia, one can expect at some point there'll be an uptick in non-performing loans. We haven't yet seen that. The increase in private credit, increase in aggregate credit actually in China, it has doubled to more than 2 times GDP over the course of the last 5 years. And as the economy slows, and particularly as nominal growth slows in China, and I'll just put a figure on that, Chinese nominal growth was about 20% in the immediate aftermath of the crisis, and is slowed to just above 6% at present. So the debt dynamics get more difficult, and so one would expect that there would be an increase in non-performing loans, and banks would have to adjust to that.
But do you think they're measuring it correctly?
Well, I think the issue with NPLs, non-performing loans, is that they have to actually start not performing before you actually measure them. So it's more perspective than actual. I would underscore that Chinese banks have a very strong capital positions. I think Chinese authorities are aware of these risks and would take appropriate actions. But there is a process of adjustment, and that process of adjustment through the financial sector is one of the reasons why we think growth there is going to slow.
So it sits there as a problem underneath it. Are there any other emerging countries that you're worried about?
Well, I would say as a whole, there are a series of issues across the emerging markets. Latin America, as you know, is slow, notably. There's a few dynamics here. One, we all know that the commodity super cycle has come to an end, and so this big terms of trade shock for a number of emerging economies has a direct result on slowing growth. So that impacts Brazil, it impacts Chile, it impacts a variety of African economies. The shift in capital flows has been marked over the course of this past year. So sustained capital outflows back into the center, potentially reinforced by advanced economy monetary policy, we'll see prospectively, but that also having an impact on growth. And then just the sort of pace of structural reform and productivity growth in these economies has slowed in the last few years.
It's been disappointing,
hasn't it? It's been a bit disappointing.
You look at a country like Brazil, the level of structural reform just hasn't happened.
Well, I probably don't want to nail it down on a specific country, but I would say as a whole, and this is a familiar tale, is that when capital's flowing in, credit conditions are easy, one can delay those types of things. Now the tougher decisions need to be taken. So I think the thing that we would underscore is our assessment is that these are not a series of idiosyncratic issues. They're broader issues, and that's why we made the bigger adjustment.